What if one investor could turn 10 rental properties into $15,000 a month in passive income? And what if he did it while working full time, without flipping houses, without managing rehabs, and without becoming a full time landlord? And it sounds unrealistic, but that's exactly what you are going to hear today in today's episode. If you live in an expensive market and you've been thinking, there is no way that rentals work where I live, I don't have time to manage projects, or I don't have hundreds of thousands sitting around for down payments, then this episode is for you. Today, we are going to meet an investor client of mine who built a portfolio of 10 out of state turnkey rental properties in just 6 years, and how he is using a really cool strategy to turn that portfolio into $15,000 a month in long term passive income. So, today we're going to be talking about how he got started from a different state, how he scaled consistently while working full time, and the mindset that kept him buying while others were sitting on the sidelines. And make sure that you stay to the end because we're also going to be breaking down a hybrid turnkey strategy that helped him scale much faster by putting less money down. And really, that strategy is what has helped him accelerate his growth. So, let's dive into it today. You're listening to Passively Rich with Rentals, the podcast for busy working professionals who want to replace the paychecks with rent checks without creating a second job, managing rehabs, or spending hours researching markets and actually build long term financial freedom. I'm your host, Melissa Nash, and I built a rental portfolio in my 40s while working and raising 4 kids. If I can do it as a busy working mom, you can do it too. Let's dive in. Welcome to the show. You guys, I've got Jefferson here with us today. And before I let him say hello, I wanted to kind of give you guys a little bit of a backstory. And it's a little bit, how many years has it been, Jefferson? When did we meet? Do we know?
About six. I think it was 2020 when we started working together.
Yeah, COVID times.
Yeah.
That seems like a lifetime ago. But anyways, okay, I digress. You guys, I want you to help me welcome Jefferson to the show. He is a wonderful, wonderful investor and client of mine that we met in 2020. And so if you don't mind, Jefferson, can you please tell the listeners a little bit about you, where you live, and then we'll kind of dive into all the cool real estate stuff you've done.
Yeah. So Jefferson Howell, I live in Thomasville, Georgia, which is South Georgia. If anybody really knows about Georgia, it's about southwest corner. So about 80 miles, 30 minutes north of Tallahassee, Florida. It's on the southwest corner. And I'm in medical sales. So I've been doing that about the last 15 years. So I enjoy that. So I'm not in an office all day and get, different area each day.
Perfect. So now, the reason why I asked you to be on this podcast is because, well, number one, I was kind of telling you before we hit the record button, I've been doing this for a really long time and I'm always on the phone with new clients and new people and people who've never invested before. And it's a little bit scary. It's a little bit nerve wracking. And sometimes it takes a little bit of courage to do that first property and to jump into the unknown. And if you guys are not watching this, Jefferson is laughing right now. This is on video as well. Um, and so, we both know with real estate investing, there's amazing things that happen, and there's also little bumps and bruises that happen along the way. But I want to kind of go back in time a little bit. Why did you first take action and invest in real estate? Like, where was your mindset, and what were you kind of thinking back then in 2020?
Well, growing up, I've always, like my parents and me, always just did the stock market, which that's what I do also. But I knew years ago I talked to a lot of people that had rental properties or commercial real estate and was like, man, that's something I'd like to diversify and get into. But I didn't really know how to do it myself or like take that chance. But then after listening to a lot of real estate podcasts, I came across you and you helped me out and I hadn't looked back since.
Okay, so let's dive into that. So you started with one property, and tell the listeners where that first property was and kind of what was going on around that. And it was a turnkey property. So kind of take us back to that first property if you don't mind.
Yeah, it was a turnkey. We did up in York, Pennsylvania. So we did that. We did the first one. It was actually a duplex, but it sold us two. So we did that one. We did both those at the same time. And then I think a month or two later, we did two more up there.
Okay. So you're on 3 there. Now where are you at today? How many doors do you have today?
Today I have 10 properties, 11 doors.
Amazing. Okay. So what has kept you going? Like why have you kept on investing? Like we started with the one in Pennsylvania. What was it about it that you were like, "Yeah, this is cool. Let's keep going."
Well, I know that you can do up to 10 properties under your own name. I was like, why not just do all 10? If I can, why not?
So what is your goal? What is your goal for real estate? Were you just like, "I want 10," and that was it? Or are you like kind of think like bigger than that, or kind of where was that goal setting, what you were thinking?
In the beginning, I thought I was going to do like, maybe like do as many as I can. But then once I got into it and realized, there's a lot more to it than you think it can be. Once I got to the 10, now I'm kind of thinking about what it's generating and what it'll be generating down the road. I feel like I'm now starting to use that money to pay them off quicker is my goal now.
Perfect. This is wonderful. I love that strategy. And I don't know if you and I have talked about this strategy or if it's something you're just kind of thinking about. Have you and I talked about the snowball strategy?
You did mention that to me in the beginning. Yep.
Okay, cool. So for you listeners, and maybe you can kind of tell us your thought process on it or what you're thinking. So the idea is, and your 10 properties are perfect. Well, we'll just say 11 doors. We'll just say 10 doors to kind of keep it simple. But the idea, right, is you have to own them first. So you buy, save up, buy, get as many properties as you can. Now we've got the 10. And just to kind of make up random loosey goosey numbers here, let's just say your cash flow is $3,000 a month for 10 properties. Then you take that $3,000 and you dump it into mortgage number one. And then that mortgage is paid off in a couple of years. And now you've got, let's just say, $3,700 a month in passive income. Then you dump that into property number two and then property number three. And then eventually all the properties are owned. And when you don't have that debt service on it, now all of a sudden you're like, cool, instead of $3,000 a month in passive income, now I have 8, 9, $10,000 with no debt service. So that's kind of the big picture of it. So how are you tackling it and what are you thinking about all that?
For the first year or two, I just paid the normal mortgage. And then I started doing like extra money on principal per month for every one of them, like two or three
Ah,
hundred bucks.
okay.
And that has made a difference. Then I was like what you're talking about. I'm like, hold on a minute. I need to stop it on all of them and focus on one at the time. So about a year ago, I started doing it all on just one, taking everything. So now my first one will be paid off on schedule to be paid off. I think June or July of this year.
Amazing. Oh my gosh, that's so cool. Very cool, very exciting.
If I keep doing that, my calculations tell me they'll be all paid off in 10 years.
Yeah, that's about right. And it depends on like how aggressive you are. And it also depends on the cash flow of the properties, right? Like in the meantime, there's vacancies that happen. There's maintenance calls that happen, right? So you're not always able to put all of that cash flow back into one of those properties. And also it depends on if you're taking other income outside of the rental income to apply to it too, you know what I mean? Because you could do that in theory if you wanted to, so, yeah, I've seen some people pay off about 10 properties in about 5 years.
Wow. Yeah.
Yeah, but again, it depends on the purchase price and how much the loan was and how much you put down and all the things, there's a lot of variables.
The money I'm using on them, I just kind of already told myself that sometimes I might have to use my own money to keep it going like that on certain months or something. But I just kind of made that decision to do that so I can get to where I want to be as soon as I want to. And the good thing too is most of my loans are at threes and four and a halfs. So my payments are what, 700, 800 bucks, and my rent's 1300, 1400. So it's got some good margin there. So
Yeah. Well, it's so interesting. I don't remember because, my brain, I've got COVID brain, old lady brain, whatever it is, but so you'll have to remind me, but I just remember that time frame, the COVID time frame, 2020, and so many people, like, were right when that shutdown happened, people were, like, in escrow, or people were looking to buy, and they were going to, and so many people got scared, and so many people were like, "Oh my gosh, the sky is falling," which it was a scary time, we didn't know what was going on, And then all of a sudden, we saw the interest rates drop like crazy, and then it was like the gold rush. I mean, I remember just, like, watching people on Instagram that were, like, basically on vacation, working from home, and, and I was like, "I'm on the phone, I'm trying to do deals," it was, like, crazy. Everybody was like, "I gotta get those low deals, I gotta get those low deals," and you did it. You were actually one of those investors that got some really amazing rates, but then at the same time, I'm a little bit torn. I'm like, "I don't know if you should pay those off." Those are pretty cool low rates, right?
Right. So now that I'm thinking about it, I think we were working together before COVID. So I'm thinking it might have been like 2019 when we started because I remember I'd already had some when COVID came. So,
Okay, then yeah, would've been earlier then.
so I have, I would say, 6 or 7 of them are in the 3 to 4 range, and then like the other ones in the 5.5. One's like 6.25. So I have a couple that are a little bit higher, but most of them are in that 4.5 range.
That's amazing. So, yeah, I'm a little bit torn for you to pay them off because, that
I know, but then I'm like, well, when they're all paid off, they'll be like its own business, it's taking care of itself, and it'll be just, that's what I've kind of, yeah.
yeah, I agree. You can't go wrong, and that's the cool thing about real estate is you have some really cool choices here. It's giving you some power. So, what do you think your portfolio is worth at this time? Like, if you put a dollar amount to all of them, do you know?
I'd say probably 1.3, 1.4, probably.
Yeah, that's pretty awesome. That's pretty cool. So, going back to talk about diversification where you were like, "I was in the stock market and we're just playing a gamble there." I mean, there's safe ways to do it, there's risky ways of doing it. I think it's a great thing, it's cool. I do a little bit of the stock market, but being able to diversify into a hard asset like that is pretty awesome.
Yeah, and I think I was looking at my accounts the other day. My mortgage to what they're worth, I think I'm about 50-50 paid off, equity in them, all of them.
And we're talking like 6 years.
That's right. Yeah. It
That's
went
that's
by
not too
fast. It went by fast.
That is not too bad. So,
Yeah.
okay, so let's get into it a little bit about I know you've done some cool strategies to get these properties because that's the other thing is people are like, "Cool, that guy bought 11 doors," but, like, where did he get the money? How did he get into them all, in 6 years? So there's a little strategy. It's I kind of want to say I was one of the ones that invented this strategy. I personally I'm going to take claim for it. Whatever anybody says, I don't care. I'm taking claim. I call it the easy burr strategy. Some people have since called it kind of like the burr key strategy. And so the idea of it is so your first properties were turnkey, meaning that the seller that I introduced you to renovated the property. You didn't have to hire a contractor. The property was given to you off market. You didn't have to make offers on the MLS. And then there was property management in place. So the idea of it is, you got the people, all the things done for you. So you can just be like, hey, I live in Georgia and I want to buy a property in Pennsylvania. How do I do it? So that's the turnkey. Okay. So we did a few of those. Amazing. Great. So now this Burr Keir Easy Burr model. So normally you hear people online that are like, hey, I found a distressed property from a wholesaler. And then I went out and I hired a contractor. I oversaw the contractor. And then I did a cash out refinance on that property and I got some of that money back for the purchase, rehab, whatever. So this is the Burr model. But as you know, we talked about this years ago, if that's active investing, I mean, you live in Georgia, like, what are you gonna do? Fly to another market, build the team, find the team, oversee it all. People do it, it's tough, it's hard, I've done it.
Yeah.
I don't know if I would do it again all my own. So this new Berkey model. So tell us a little bit about that model that you got into with in Memphis.
So as we discussed, my first 4 were in Pennsylvania, and then I have 6 that are in Memphis now. And working with you and like working with Robert up there in Memphis, I've done probably 2 or 3 in Memphis the normal down payment way, the normal traditional way, but the other ones I did through that Burr strategy. My most successful one was after I rehabbed it and everything and refinanced it. It cost me $165.
What? Okay, 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 that's a really good one. Was that one with Robert?
Yeah, yeah. Yep.
Dang. That's a
Yep.
good one. You have me well beat on that. I have not hit one like that.
That was my best one. But my other ones I did with him were still much less than the 20% down, maybe 5 or 10%. But it definitely made a difference. But yeah, that was the one. Yeah, after I did the refinance, it was $165.
Dang, that feels so good. I mean, your return on investment on that is like that's like gold.
Exactly. Yeah. Yeah. So
So walk me through, what did you do in that property? Like, what was your responsibility?
my responsibility is pretty, not a whole lot. I mean, just letting Robert do his thing and telling me what, showing me the house, the scope of work, what he's going to sell it to me for all in, and then what he thinks it would be worth. And I just trusted him, and he's been good to me the whole time, and it worked out. I think having somebody you like and a good relationship with and trust is the biggest thing.
Yeah, yeah, definitely. Well, and I will say it's like your situation is extremely rare. I've not heard of anybody that got out of it for such a little amount. Like, that one's good. So everybody listening, like, don't expect that.
Right. Yeah, that was the only one.
Yeah, yeah, you're not gonna get that, just so don't call me and be like, "Where's that deal for $165?"
Yep. Yeah.
You're right, though, the most typical ones and the way that I explain it is, if you buy a turnkey property, let's say for $150,000, you're gonna put 20% down plus closing costs, okay? And if you did that same turnkey type property with this program, maybe you put 10% down plus closing costs.
That's right.
That's kind of typical, kind of what we've seen. Maybe it's 10%, maybe it's 12%, but you're saving money. You're not getting all of your money back out of it. But like you said, you didn't do anything.
Exactly. Exactly. Yep.
You
Exactly.
just kind of verified the information.
That's right. That's
You
right.
weren't out there overseeing the contractor and putting together the scope of work and,
Right.
you
Right.
know, and part of this too that I want to ask you about is so the lending side of it. So were you able I'm curious, I can't remember which lender you used. Were you able to do a cash out refinance immediately, or did you have to wait that 6-month seasoning period?
I did have to wait. I did have to wait. I used Security National Mortgage for all mine. Every one of mine I've used Aaron Chapman with for.
Yeah. Okay.
And I'm thinking I had to wait. Yeah. Yes, I had to wait 6 months. Yeah.
Okay. So there's new loan programs out there, just so everybody knows, and for you, for your knowledge as well, that they can actually not boycott, but avoid that 6-month seasoning period. And you can actually do your cash out refinance sooner. You just have to work with the lender at the very beginning when you're first putting that property under your name for the first time before the renovation started. If they include certain documents and certain information and certain verbiage, then it's looked at as a flip kind of a situation, and so that's how you're able to do the cash out refinance. You don't have to wait that 6-month seasoning, and I've got some amazing lenders that can do those all day long, so anybody listening, let me know, we got the hookup. I was gonna say, I've done some of those Memphis deals as well with Robert, and yeah, they're kinda cool. It really helps you save money to scale so that you can buy I don't wanna say 2 full properties for the price of 1, but maybe 1.5 properties for the price of 1, unless you found that $165 deal.
Yeah. No, I agree. Like with Robert, I feel like he's a friend that I never met before in person. I've built a good relationship with him. I'm planning on going up there this spring. I think drive up and hang, meet him and everything. But the thing about Robert is we had some hiccups here and there. But the good thing about him is he's gonna answer the phone. And he's gonna take care of it. He's gonna do what's right.
100%. And you know what? And I'm so glad that you said that and you kind of led into this segment is because it sounds amazing, like, we're sitting here going, "Oh, everything is roses and daisies," but there are things that happen and there are things that come up, and working with people that are going to help you, understand you, pick up the phone. I've had clients that call me and they're like, "Hey, I'm having an issue with a property manager in X market." And I'm like, "Okay, let's talk about it. Let's look at what's really going on. Is it really the property manager? What are your options? What are your choices?" At the end of the day, You can move property management companies, and sometimes people just need to have a little bit of hand holding, a little bit of comfort, knowing that somebody's in their ballpark that wants to support them. And
That's right.
you're right. Robert is that person, and relationships are the business, right?
Yep, absolutely, absolutely, yeah.
Well, and that model has worked out really well for Robert because of, like you just said, how Robert is. This model has not worked out for everybody. Many people have tried to repeat this model and it's been a failure. And it's because you really need somebody on the other end that's gonna pick up that phone and answer when you call. That is a huge part of it. And then since I've been able to help a couple other teams do this model as well in a couple of other areas, I just did one in Little Rock. I was like, "Hey, I'll be the guinea pig. I'll help you guys kinda set this up." That one worked out great. I think that one now my total out of pocket on that one, I think was $6,000.
Oh, nice, nice.
So that's a win.
Absolutely.
Not $165 like yours, but it was just still pretty good one where I got this amazing property, and I'm like, I spent $6,000 on it. Owning it for 1 year, I've already recouped the cash flow.
Right, exactly. Yeah.
Okay, so anybody, this is my call to action for you guys listening. If you guys want to learn about this Burr Key type program, just reach out to me. You're going to see the links in the show notes, so we will hook you up. But other than that, so what is the next steps? I mean, you're starting to pay these off. Are you going to continue to buy? You might be flying out to Memphis to see Robert. Like, what is your plan? What's next for you?
I'm not sure yet, but I'm thinking about I'm not at that stage of do I wanna just pay them off and just have the 10, or do I wanna keep growing a little bit? So I'm starting that mindset where I'm trying to figure that out yet. Yeah, not totally sure. Yeah.
Yeah, well, you've made such good progress getting to those 11 doors in such a short amount of time that it's okay to let the dust kind of settle and kind of take a second and go, "Okay, what is next? What is the real strategy here?" I think that's smart. You've given yourself a lot of choices there. So, yeah, well, and that's the thing is you're gonna let them do their thing now. You like 10 might be enough for you, and that's okay, or 11 doors. They're doing their thing. They're going up in value. You kinda set the stage for your long-term goals, so amazing. But
Yep. Absolutely.
anyways, okay, I'm gonna ask you one last question, then we're gonna let you go. So, what is one piece of advice you have for the listener, the kid brother or sister that you're gonna put your arm around them and be like, "Hey, this is one thing that I would love to tell you about your real estate journey or investing or starting." What would that piece of advice be?
Oh, I would just say that it's not as scary as it seems. Find somebody like you or somebody they can trust, and show them the ropes in the beginning, and just go ahead and dive in and try one and see what you think about it. I mean, it's not as scary as it can be. So
Great advice. You guys heard it from the guy who started investing from Georgia and he bought his first property in Pennsylvania. It's not so scary, you guys. You can do this.
that's right.
Amazing. It was so great catching up with you. And thank you for your time today on the show. And again, you guys listening, please check out the links in the show notes. I'm going to have all this information for you. So I can't wait to chat with you. Thanks again, Jefferson.
Melissa.